We've got a really busy week coming up in terms of economic and company news. Top down, the key features will be interest rate decisions from the Bank of Japan and also the European Central Bank on Thursday the 20th. Although neither Governor Haruhiko Kuroda nor President Mario Draghi are expected to change policy, analysts will pore over their every word to see if there's any hint about a rate rise or a move to stop buying bonds through their quantitative easing schemes anytime soon. In addition, we have UK inflation figures on Tuesday the 18th. In May, the headline Consumer Price Index, or CPI, rose by 2.9%, and the Retail Price Index, or RPI, by 3.7%. It'll be interesting to see if these numbers cool a little now the oil price is coming down and the pound is going up a bit. Certainly retailers will be hoping so, as both numbers are running well ahead of wage growth, potentially crimping consumer spending. On the company front, there are 11 FTSE 100 firms slated to produce results, trading updates, or host their annual general meeting for shareholders in the coming week. They include Rio Tinto and BHP Billiton, with production reports on Monday the 17th and Tuesday the 18th, Utility 7 Trent on the 19th, Airline EasyJet and another utility SSE on the 20th, and last but by no means least, Vodafone on Friday the 21st. But for me, the company really capable of causing a fuss is Unilever when it reports first half results on Thursday the 20th of July. This is the latest big test for the Anglo-Dutch food to personal care and hygiene giant, which owns Knorr, Ben & Jerry's, Marmite, Magnum, Persil, Dove, Domestos and many more besides. And it's a big test for three reasons. First, the company is still feeling the heat after February's failed takeover bid from America's Kraft Heinz. That company offered just under $50 a share in cash and stock in a takeover bid, something like £40 a share. And as we can see here, Unilever now trades above that mark, and boss Paul Polman will want to convince investors he did the right thing by rejecting the approach. Second, a couple of global peers, our own Reckitt Benckiser and America's Mondelez, have issued profit warnings. Now admittedly, they've both blamed the Petsy cyber attack, but both have been making hard work of meeting sales growth targets before even that. Third, in a similar vein, Unilever's first quarter results weren't great either. Global sales volumes fell 0.1%, although a 3% price increase saved the day. Any further slowdown in volumes could start to make life difficult for Polman and his team. So, when it comes to the first half figures, you need to look out for three more things. First, the headline sales number. According to Unilever's very helpful website, the latest consensus analyst forecast is for first half revenues of €27.9 billion, up 6% year on year. But the underlying growth rate is what really counts, where Unilever has a target of 3 to 5% a year. It undershot that in the first quarter with a 2.9% advance. Food was the big source of weakness in Q1, where underlying volumes fell 2.1%, which was interesting in the context of the price row with Tesco over Marmite. So keep a particular eye on that, the food volume growth. This next chart shows the underlying sales growth by quarter over 5 years at Unilever, and it has to be said, the trend doesn't look great, especially as the stock is generally perceived as a dependable grower. The next graphic here looks at trends in underlying volumes and underlying prices. The mix here will be very important as volume growth, the bars, has been negative for 3 quarters in a row. Price growth, the line, has been compensating, so this is a good near-term test of just how strong Unilever's brands really are. Then you need to look at profits. The consensus for headline operating profit is €4.2 billion, with an underlying number of €4.7 billion once you adjust for some restructuring costs. These figures compare to 3.8 and 3.9 billion a year ago. Third, Mr. Polman will no doubt provide an update on corporate strategy. A €5 billion share buyback programme began in May, and the company has put up for sale its spreads business, which includes Flora. Watch the dividend too, given Unilever's plans to return more cash to investors. At the first quarter stage, Unilever increased the payment by 11% to €0.3585, equivalent to an 18% increase to 30.21p, adjusting for the weakness of the pound. This final chart shows the quarterly dividend progression in pence, the bars, and euro cents, the line, over the last 5 years. Thank you for watching, and I look forward to seeing you next time.